What's up, guys? We're going to give everybody a couple minutes to join, and then we're going to get started here. All right, it's 8 o'clock. People that are late, all good. We're gonna get started here. Okay, so basically what we're going to talk about today is trends. So we've built upon the basics of basically support and resistance, higher highs, higher lows, consolidations, things like that. We've built upon that already. Now we're going to talk about, okay, how can we actually play these trends? And how we're going to do this is we're basically going to use moving averages. And you can use the identification of higher highs and higher lows, doing that without moving averages, but it makes it a little more subjective, and it makes it more based on opinion rather than actual fact. So I've kind of leaned towards moving averages because they are indisputable. They're there. You don't choose where they are. You don't get to choose where they're placed, so on and so forth. So basically, the reason why I use moving averages is because you can't change them. Like if someone has the 21 exponential moving average on their chart, they're going to see the same one as you do. But if I'm choosing a higher low or a higher high for that matter, or a lower low or lower high, it can become subjective. And my higher low might be different than yours. And this way it kind of makes it bulletproof, right? So like if you are trading this based on something that is absolute and not something that you identify yourself, that's why I use moving averages. I try to take as much subjectivity out of trading, meaning trading off of intuition, trading off of how I feel about a certain thing. I try to take as much of that out as I can, set rules for myself, and then trade based on those rules. And I don't like any part of my trading become subjective, right? I want all of it to be set in stone. It's the same every time. No matter how I feel on that day, I need it to be set in stone how I do that, right? And it might be more fun and thrilling to make decisions based on how you feel. But in the long run, you're just hurting yourself, right? Like in the long run, you trying to make decisions based off of how you feel, you're going to hurt yourself. And because one day you're going to have a bad day, you're going to get in a fight with your significant other, whatever it ends up being, and you're not going to be mentally there, right? You're not going to be mentally there to trade at the best capacity. So I want to be able to come in every day with a solid plan that is indisputable. Nothing is going to change about it. It's always going to be the same, no matter how I look at the charts. And so that's why I use moving averages to help me understand that the trend is always going to be the same, no matter how I spew it or change it, whatever. Okay, so let's get into into that. So how I identify trends, making it super simple. Okay, so there's 3 moving averages that I like to use. I'll get my little drawing tool out. So there's the 8 EMA. All of these are exponential moving averages. So oh, that's an ugly E, sorry. MA, right? So exponential moving averages. If you want to add this onto your chart, if you use TradingView, moving average exponential, or you can use the moving average ribbon, and that will give you multiple EMAs that you can use in one indicator. Okay, and so you just throw those on your chart. And so I use the 8, the 21, and the 34. Once in a while, I will throw the 50 on there, but 9 times out of 10, I'm using these 3 right here, the 8, 21, 34. Those are the EMAs that I pay attention to, right? And those are the ones I like to trade and use for trade identification, okay? And so what we're looking for is to play the trend. You do not want to try to trade the opposite side of the trend. If the stock is going up, you want to go with it up. If it's going down, you want it to go down. As simple as that may seem, a lot of people make trading way harder than it is, and they will completely spew this and try, say, if I buy down here, look how much risk reward I'll get, blah, blah, blah. No, trade with the trend. Your win rate will be much higher if you just continue to trade based on the trend. It'll make your life a lot easier. And so this is how I identify it. So I use these moving averages here. They're all exponential moving averages. And so what I do is, if I'm gonna move to a higher time frame, so it's not as choppy. But okay, so let's look here. Clear this off. So this here is the 8 EMA. So the 8 EMA is basically an average price based on the past 8 bars, and the difference between exponential and a regular moving average. So there's exponential moving average, and then there is a regular moving average. So an exponential moving average is one that puts more weight on the last few bars. So this 8 EMA here takes into account the past 8 bars, but it puts more weight on the last few. I don't know exactly how they calculate that, but that's how it works. And I've always came up in trading using the exponential moving averages, and I like the way they look better. And then also on top of that, there is the moving average. The regular moving average will take the average of the past 8 bars in general, not putting as much weight on the last few, but equal weight across the last 8. So here's the 8 EMA. You can see that's the one, the blue one. And then here, this dotted gold looking one, that is the 21 EMA. And that takes into account the last 21 bars and puts more weight on the last few. And then there is the 34 EMA. So this 34 EMA takes into account the last 34 bars, putting more weight on the last few. Okay. So that's how these moving averages work. And so they are basically a representation of the average price based on the close of each bar on the chart. Okay. So simple enough. So how I identify trends are, if the moving averages are stacked positive, like as you've seen here, so the 8 is on top of the 21 and on top of the 34, that indicates to me that we're in an uptrend. It's that simple. We are in an uptrend if these are stacked on top of each other. And if you add the 50 in there, the 50 would be below the 34. And what we'll do is I'll add that in there for you, so you can see that as well. So there's the 50. So these are stacked moving averages. The 8 on top of the 30 or 21, on top of the 34, on top of the 50. Pretty simple. So that's what I look for an uptrend. Okay. Now, what do I look for in a downtrend? The exact opposite, literally the exact opposite. I'm looking for the moving averages to be stacked negatively. So here's an example. The 8 here is below the 21, which is below the 34, which is below the 50. Those are stacked negatively. So that is a downtrend to me. This is a downtrend. Okay, so uptrend is when the moving averages are stacked like this. 8 on top of the 21, on top of the 34, on top of the 50. That is an uptrend. Downtrend is the 8 is below the 21, which is below the 34, which is below the 50. Okay. And if you guys have questions, drop them in the chat and I'll answer them as best as I can. And then so the next thing is, what happens when these cross? Okay. So what I like to pay attention to is when they cross, like here, or here, this signals to me a trend change on that time frame. These EMAs are going to be different based on every time frame. It might be different. Like the EMAs will look different on the 1 hour than they do the daily. They will look different on the daily as compared to the weekly. They're just going to be different because they're different time frames. So that's how I identify the trend on each time frame. Okay. So here you go. So this is whenever they cross and change the stack direction, what I'll do that signifies to me that the trend is now changing. And now I need to start looking, instead of looking for puts here, now I need to start looking for calls. And then same thing here. When this happened, okay, now I can only look for puts until we start trending back upside. I'm only looking for puts now until we have a cross here. Now I can start looking for calls. Okay, now I'm looking for puts. Now I'm looking for calls. Still looking for calls. Still looking for calls. And there's still no reason still to be looking for puts. Do I put more weight on a certain time frame to identify a solid trend? Absolutely. So the higher the time frame, the more important the trend is. The more important the trend is. So the higher the time frame, the more important the trend is. So the daily is more important than the hourly. The weekly is more important than the daily. The monthly is more important than the weekly. Okay. So now, now that we understand this, right? I'm going to remove the 50 because I don't use that as much. And I like looking at these three. Okay. So now when we're looking at this, here's something to take note of, right? So when the moving averages, just to reiterate, when the moving averages are stacked, I'm only looking to play the upside, looking for calls. When the moving averages are stacked negative, I am looking for puts. Okay, so when do I say, okay, the trend has changed? Easiest way to do it is wait for all the moving averages to be stacked again. So like here, you wouldn't be able to do anything here. It's not solid, but then you can just wait for them to be completely stacked to take the trade. So then if I'm looking for, but if I'm trying to be a little more aggressive, and this is typically how I will identify it, is I will pay attention to when the 8 crosses the 34. When the 8 crosses the 34, that signals to me, okay, this is good enough of a trend change. I can start looking for calls here. So you can see that happened here. You can see it didn't happen here. It tried to do it here, but never ended up actually doing it. You can see it happened here. You can see it happened here. You can see it happened here. Those are high signal, or I put a lot of weight on that when those shift, when the 8 crosses the 34, that becomes a trend change to me. That's what I identify as a trend change. So now, if you want to make it a little more simple, that's kind of why I don't use the 50 as much, Now, if we take the 21 away, now you can see it a little more clearly. Here's a trend change, trend change, trend change, trend change, no trend change. We haven't had a trend change in a long time. We might be getting there. We'll see. We'll just have to see what it ends up doing. Here's a trend change. Here's a trend change, trend change, trend change, fake out. Notice this is the only fake out we've seen in almost 2 years, right? Trend change, boom. Okay. Let me know if you need better explanation on that. It should be good to go. Okay. So now, let's see. So when it comes to deciding calls versus puts, do you prefer daily trend or weekly trend? Well, honestly, what I would do is I would wait for both of them to align. I'd wait for the daily time frame to align with the weekly time frame, and then I would decide to take the trade. So like if the weekly is in an uptrend with the moving average is stacked positive, but the daily is in a downtrend, I'm going to wait for the daily to flip back bullish into a stacked EMAs bullish, and then I will look for the trend, or then I will look to take the trade. So yeah, so that kind of leads me into my next topic. So let's go look at like QQQ. Okay, so let's clear this off. Okay, so when I'm looking, so this is a simple, very, very simple way to do this, right? So you can see on the daily time frame, we have had an uptrend ever since this right here. We've held an uptrend. So an easy way to look at this and say, okay, where are pullbacks? So you want to buy in on pullbacks, right? So what's an easy way to do that? Let's go to the 1 hour. Okay, so anytime the 1 hour shows me a downtrend, I'll just wait for it to flip back to an uptrend, and I will take the trade based on that. So here you go. So you can see we're in a downtrend pullback. We reclaimed and stacked positive again, and boom, we had to move upside. Trend change down, we move back positive, boom, there you go. Chopping around. Then we had trend change down, we had to move up, and then we continue to trend up. We had to cross back down, cross back above, and now we're back in an uptrend. Same thing here, cross back above, now we're back in an uptrend. Okay, we cross down below, we're bearish for a little bit, cross back above, now we're in an uptrend, gets choppy here, crosses back below, we get back into an uptrend. Same thing here, and now we had a little bit of an uptrend, now we're continuing downtrend. So naturally, we're in an uptrend as of right now for the daily time frame, so what are we waiting for? A move for these moving averages to stack back positive, and then we ride the trend back up. Super simple. So that way you can identify, you can use it with the higher time frames and the lower time frames. Or so you can be in sync with the higher time frames. Okay. So now let's say we look on the weekly. Okay, now the weekly started a trend change right around here. So any downtrend on the daily time frame, we could look for upside. And really, there was one opportunity to do that right here. We had our fake out below, came back above, and then we trended ever since. So that's how you can use moving averages to identify the trend on the higher time frame. So basically what you're doing is you're finding an idea time frame. Right now, the daily time frame. Sorry, let me answer this question. I lost my train of thought. So now it says, so now that the daily is in a downtrend, are you taking puts or waiting daily and hourly to show the same trend? Okay. So if you remember what we were talking about, when I think the daily is in a downtrend is when the 8 EMA crosses below the 34. We haven't had that yet. So we're still in an uptrend on the daily time frame. So what am I looking for on the lower time frame? I would wait for the hourly unless the 8 crosses below the 34 on the daily time frame. I'm still going to be looking for this to come back above and these moving averages to stack back positive to go long and buy calls. So the daily's not in a downtrend yet. The 8 has to cross the 34. It hasn't even crossed the 21 yet. We need to see it cross the 34, and then I will go long, or then I will consider to go short. But right now, the moving averages are stacked. So right now, if we had a trend change tomorrow, I'd be looking for calls. Won't work every time, but 9 times, or not 9 times out of 10, just majority of the time, it's going to continue with the trend that it's already in. Does that make sense? Okay. So what I'm looking for is now we're kind of in sit and wait, right? If you're a swing trader and you're looking to take this trade based off of the trend, what you got to do is you wait for the moving averages to cross and then you can get bearish. But until then, you're thinking, okay, this is just a pullback and an uptrend. So I'm going to wait for the moving averages to cross back positive, and then I can take my entry, and then we can ride it back to here and then the high. Because the daily is not giving me any signs of, typically a starting sign is when the 34, or sorry, when price starts holding below the 21 EMA, that's usually not a great sign. But that doesn't give me a trend change. I have to wait for these EMAs to cross, and then I'll start looking for a downtrend. But until then, I'm not looking for a downtrend, or I'm not looking to play puts. Until then, I'm waiting for the lower time frames to cross back bullish, so then I can go long. Here's an example. This should be an example. Okay. Here you go. Netflix. Clear uptrend. EMAs never crossed. It got a little messy here, but the 8 never crossed below the 34. So we're still in an uptrend on the daily time frame. Let's go to the 1 hour. The 1 hour, notice, is starting to pick back up and cross into an uptrend. It looks choppy, but it's starting to trend back upwards. So this could be a candidate, but this will only work if the indexes start going up as well. It could work if the indexes didn't start going up, but that's not a trade I'm going to take. I'm going to take a trade that when the indexes are going up, I'll trade something else because I need to trade in sync with the indexes. You guys have any questions? You good? Concerns? Anything that's lingering that you might be confused on? I know you guys had a few questions in the last class about moving averages, so here's the time to ask it. Do you normally prefer calls or puts? I don't have a preference. I mean, it's totally based off the chart. I don't have a preference. You'll see if you're in the signals chat, just as much as I'll go short, I'll go long. It doesn't matter. I'll play puts as just much as I play calls. It really doesn't matter. It just has to follow the trend. Like it needs to be in sync with what the overall trend is doing. And it's completely based off the charts. I trade complete based off of technicals. Yeah, no bias. And like today, everybody was buying puts. And I played calls today. Not calls because I traded futures, but I went long today. I bet the market was going to go up today. Why? Because the market showed me this. Here's a prime example of a trade that I took today. Notice this clear downtrend, notice the shift. Okay, I played calls to the upside. I actually played it on YM because this was the stronger ticker of the day. But notice, so I traded it off the 5-minute. Clear downtrend. We shifted trend. The 8 crossed above the 34, and we created an uptrend. So I took the trade. That's what I'm looking for. I'm looking for the trend analysis. And you can see how well this holds up, right? Like, here's your trend shift, continue down. The lower the time frame, the more choppy it's going to be. But the higher the time frame, the easier it is to trade it. The more patience you'll have to have, but the easier it will be to trade the higher the time frame. So to answer your question, do you normally prefer calls or puts? Well, I mean, okay, so we'll put it this way. Based on this chart, what do you think I'm probably playing more often? Probably calls. I mean, we're going up. Majority of the time, the market has been in a bull market. Well, quote unquote. I mean, they'll say there's a bear market here and there, but majority of the time we're going up. So majority of the time I'm going to be long. So, but the thing is, that's how I'm going to base my trades. I'm just going to be long. And then when the lower, and when I'm short, it's when the charts show me that it's time to be short. And that's the only time I'll go short, is when the chart tells me to, and my setups tell me to. And yeah, what platform do you use for future trading or for future options trading? So options trading, I use Thinkorswim, and I have a margin account. So I trade for futures, I trade on Tradevate. For options, well, and futures, I trade on Thinkorswim as well. So Thinkorswim, I have a margin account that allows me to trade futures and options. So I trade both through there. And then I also trade through Tradevate as well. So to answer your question, I do both futures and options on Thinkorswim, and then strictly futures on Tradevate. And I honestly prefer futures over options because there's no Greeks and stuff like that. I actually have been getting a lot into selling premium recently as well. What are these blue, yellow, and red bars? Oh, here, this is the squeeze. So, is this what you're talking about? This right here? Yes. Okay, so we just did a full class on the squeeze, what that is. And so I've actually been doing a whole series on what this is. So I don't know if you're in the Signals chat, we got a 7-day free trial. So you might as well just go in there and check out the videos. And if you don't like what we're doing in there, you can cancel it. You won't get charged anything. So 7-day free trial, go in, sign up. Then you can watch all the videos on that explains exactly what this is. But this right here is literally the basis of all my trading. This indicator right here. It measures volatility, in the market when certain times volatility is very compressed in the market and the market is setting up for a big move. And typically I like to wait for those periods of time when it's setting up for a big move, and then I trade that. So for example, on YM, I was able to catch this move from here to there, from here to there, based on this indicator, and that's what triggered me to take the trade as well as the trend. And yeah, so that's what that is. I do a full in-depth class on that in the Signals chat. You can check that out. Any other questions? You guys got questions? Or are we all good? This is the time to ask it. We got about 10 more minutes. And if you have questions, I'm more than happy to answer them. But if you're good to go, can you sync this to your trading platform? Can you sync this to our trading platform? Can you clarify that question? I'm not really sure what that means. Where do we find the video? It's in the OT education tab in the signals chat, and I'm going to post in here. That's the sign up link. I just posted the sign up link in the chat. So you can sign up, get the 7-day free trial, check it out, see if you like us, see if you want to stay. We got a pretty cool community in there. We got, including me, we have 3 different analysts that we work with, and they're good guys, very helpful. Okay, cool. You already signed up. Nice. So yeah, that's in the OT education tab. If we set up levels on the chart, will it trigger buy sell signals? I still don't know what you mean. I mean, if you like if you set these EMAs up on the chart.
Maybe, yeah. I just wanted to ask if we set up the levels over here. For example, if I have lower level and upper level, will it sync with my trading platform and automatically buy, let's say, a particular call once the EMA goes up above the 32 EMA?
I think you can do that. I don't do that. You might have to do some research on that on your own. Because I don't use that. I don't do automated trading. I just trade on based on what I see. I have a particular setup, and then trade it based on that and use it manually by myself. But I'm sure you could do that. I wouldn't trade it based off of EMA crosses because I use a lot more in my trading than just that. But you could. I mean, I don't see why not. You could place a buy order for a limit price on your options contracts, and it will automatically trigger when it hits a certain price. But based on this stuff, that's more automated, like algo trading, and I don't do that, so I can't really help you with that. I'm sorry.
Okay, thank you.
Yep. Look at Tesla hour. Does it look like a squeeze? Looking for an example of a squeeze before it happens or in the moment. Hey, Sebi, just go and add this onto your chart. It's called Squeeze Pro right here. Wait. Right here, TTM Squeeze Pro, Beardy Fred. And I posted that in the OT education tab, and you'll be able to see that. So anytime it shows those red dots or black dots, that mean or yellow dots, yes, this is Trading View. Yeah, so if it shows that, then yes, it's in a squeeze. So if we look at the hourly time frame, it's not showing red dots or black dots or orange dots, so no, it's not in a squeeze. Trying to get to all these questions. What platform are you using to make your chart and see all the candles and EMAs? Yeah, this is Trading View. Yeah. But yeah, no, this is not in a squeeze. So if it has black, red, or orange dots, that means it's in a squeeze. And these green dots means it's not in a squeeze. So no, Tesla's not in a squeeze right now. So I wouldn't be looking to trade that personally. Is that it? Is that all the questions you got for me? You guys good? Good. Okay. I'll give you one more minute to see if you got any more questions, but seems like you guys should be good to go for now. We have these classes every week, every Tuesday. So just to reiterate, so we have Sunday watch list class with Bullish Ant. We have a Thursday night market prep with Bullish Ant. We have live trading on Fridays with me. We have 2 classes on Tuesdays, one for Signals members, one for everybody. That's free, which is this one. Those are on Tuesday nights. And then, yeah, I think that's it. So we have about 4. And then on Sundays, we also have a class on how to budget. We're going to have a guy come in and talk about investment properties. And then we're going to have our tax strategist come on and talk about tax strategies. And then we're going to have a couple of mortgage lenders come on and talk about how to best do mortgages in this time period. Currently, we are waiting for CPI inflation to see market goes which way for clear direction. Yeah, I mean the market usually price precedes news. Usually what will happen is the charts will set up and the news will typically kick off what we're doing or what is already shown on the charts. But yeah, it's definitely more risky to get into trades. I've been kind of risk off in the past couple of days just because of how the market is right now. With us just kind of trading in between these 2 EMAs, no real direction. If you look at the lower time frames, you can see it's pretty choppy. We're not really going anywhere. So I've been a little more risk off this time, and I'm really waiting on. I think the market's waiting on CPI. Yes. So, yeah, that's the correct way to think. I think it's safest to just wait until CPI comes out on Thursday morning to get more clear direction. Tomorrow will probably be choppy as well. Just waiting on that data. But yeah. So yeah, make sure if you guys aren't in the Signals chat, come join us. We got a pretty good group in there, and we have lots of classes that are coming out. Like I said, we've got 2 on Tuesdays, 1 on Thursday, live trading on Friday, 2 classes on Sunday. So we're at about 5 classes a week. So yeah. If you guys have questions, let me know. Let me know in the Signals chat or regular chat, whatever you're in. And yeah, thank you guys for coming. Have a good rest of your night, and I'll see you for the markets tomorrow.